Welcome to the Advice from the Deal Room with AI Financial Group, hosted by Matt Russell and Ben Record. I am Ben Record, and Matt Russell here is my co-host. We are going to start off talking today about what is a broker. What do you think a broker is, Matt?
Out in the industry, we hear a lot of different stories, but a broker is someone who comes in and gets somebody a loan. We're speaking of this in commercial sector. They want to assist clients in obtaining a loan from from a lender. It goes more than that, what people think it is, in different ways that people do it. Question to you, man, what do you think a broker is?
Well, I definitely think it's not just taking a deal and throwing it out to a bunch of lenders, because that's something that a lot of brokers do. A good broker should be someone that's involved with you beyond just the specific deal request and is really trying to help figure out what are you trying to do? How do you structure the deal? How do you make sure that you're set up from a borrowing situation so that you can get the best financing for you yourself and kind of really working more from an advisor role. I think that's what a broker should be.
And I think the understanding the marketplace is brokers are somebody go to the just place you with the lender and they walk away. They're not any work involved. That's what we hear what from our lending network is what brokers typically do is they just connect you with the lender and they walk away. It's not all of them, but that's just some bad represent one bad apple out there causes all this for the industry, gives a negative connotation to what a broker is, you know, what a real broker does, and one thing that we try to rely on here at AI is I get people are like, what do you do for them? Well, we're a commercial loan broker, but I consider ourselves more of an advisor. We go into the advisory aspect more than just a broker. If you want me to connect you with a lender and try to negotiate the best rates and terms, and that's all you want me to do, that's fine. But that's not what we want to do here. That's not what we hang our hat on. That's not what we're building our company around. So I think the conception on the marketplace is this, but we're trying to do it different than what the marketplace sees it at. And a lot of people see also that a broker is somebody who handles deals that are too difficult to go through a lender directly or with high net worth clients who just use a broker because it's easy.
I think that a lot of brokers think of themselves kind of like mortgage brokers in the sense that they're just there to help them find the best lender. While that is something we do on the commercial side, there's a lot more that goes into it than just finding the right lender. It's structuring the deal in the right way, making sure that you've got your ducks in a row before you go and apply for the loan. For a lot of our clients, they could get loans on their own, but it's more of the time that they would spend working with the client, working with the lender, going back and forth, trying to get the deal in the right format and that the lender is going to approve it, all of those type of things. That's what we do on a daily basis. And so we can do that for our clients and allow them to go spend their time on focusing on the deals. That's what they do for a living. This is what we do for a living.
The structuring deal is an advisory capacity of thinking of where are we at today with the project? Where are you at financially? What's your ultimate goals? We treat it more like a stock advisory, financial planner does for your retirement and stock accounts. We're treating the asset class different. It's your business and your real estate investments. That's what we're looking at. What's your short-term goals? What's your long-term goals? And making sure whatever structure we put in place and connect you and whatever lender we connect you with has that in mind and is set up for you for today's success and future success down the road. Because I feel it's more as we're more of a partner in a deal than we are a broker in a deal. We are part of their team to accomplish their goals.
I mean, just the mindset of how we go about working and being an advocate for our deals, we almost kind of act like it's our deal, like we're the owner, borrower, whatever, when we go to the lenders. We do so much work to make sure that we understand our client's background, the deal's background, all of that when we're making our commercial loan request, so that when we go out, we can have those conversations with the lender like it's our deal, it's our baby, that type of thing, because that's what our clients would do if they were to be the one talking with the lender. but we're trying to save them that time. So we need to be able to provide that same value back and that same passion back about the deal. I mean, I don't know how many times we've saved a deal because the lender was saying no for a certain structure, but because we had passion and we knew we believed in the deal, we were able to come up with a different structure that made it work. I think a lot of brokers, they put it in the quick box and they ship it out. And if it doesn't hit, they move on. They don't care about it because they're just trying to make the money per deal. Yes, we get paid per deal, but we're not trying to get rich on a per deal basis. We're trying to create a relationship with a client that leads to 10, 20 deals down the road. That's where we build our wealth from.
We're relationship driven. Why do clients come to a broker compared to going straight to the bank, Ben, in your eyes?
A lot of times when I started, it was primarily clients that I was working with that were on the newer side of things. So like they didn't know where to go and they didn't know what to do. And so they just wanted help. As I've worked with more seasoned clients, they want an advocate on their side. They want someone that can help push the deal forward and help make sure it's in the right structure, as well as give them the advice. I mean, even from as simple as, hey, let's make sure that before you file your tax return, let's have a conversation with your CPA to make sure that you're set up for borrowing next year so that we don't have your tax returns showing no income and now you can't borrow. Like we go above and beyond with from the advice standpoint that doesn't just go to one deal. And a lot of the clients that come back and work with us again and again, they're the ones that value that type of service.
The other thing is time. And time in this world is something is a finite. Time is finite. You can always go make more money. You can always go buy more materialistic stuff. You can do those things. But at the end of the day, one thing that we have a finite amount on this planet in this world is time.
Yeah.
We can't get more of it. We can't buy more. And one thing that we try to really advocate back to our clients and then potential new clients is time. Time is valuable. And if they're doing one thing, they got their day job, they because some we got clients that got day jobs, we got clients that are full time in the real estate, we got clients that's just passive for them, whatever it may be. They're probably better off doing using their time somewhere else, which makes them more money, which time value of money, you look at why people outsource their mowing their grass or cleaning their house or doing these things, it's because two, one, they're not the experts sometimes. Like, man, that guy can cut the grass and do all my fall and spring cleanup better than I can ever know to do, because they do it all day long.
Mhm.
That's number one. They do it all day long, so they're going to be more proficient at the job, and they're going to be able to do it at a higher level than what we can do. And two, is that really what I want to do with my spare time? Is my extra hours I do have in my day? Do I want to spend with my family? Do I want to spend it working where I do this, or do I want to go talk to banks all day? Broker can talk to five banks faster than you can talk to one bank. So we have the
Mhm.
ability, brokers have the ability to do that on your behalf faster than you can do it, and actually speak the language that lenders speak too. Because when you're out there in the lending world, there's language spoken, and and you speak to everyday investors that even have some real estate property. Go, what are you talking? Well, this is what they really mean, right? We can take their language and take it and put it into what language is understood over here and go, this is why we need this, and this is what the reason is, compared to a lender going, well, I need this. Well, why do you need that? I need it. Well, oh, they need it because this. Then you ask the question back to lender, are you asking for it for this reason? Because it mitigates this, or you need for the files for regulators, whatever it may be. I can explain that better back to the client than a client going, you know, deer in the headlights kind of look going, what in the world are they asking for? So it's those few things of time is your thing is proficient brokers are proficient in it. This is all they do all day long. And two, you have time in your day. There's other things that clients can be doing that is more beneficial to them than working with lenders and trying to fit this in, especially somebody who does one project a year, two projects a year. They don't have this cut on their everyday routine to go talk to the lenders. That's where the time comes in. There's other reasons besides the time, things like that, why people use brokers, but time is probably key.
The other thing that I was thinking about that's a big source of our clients is our relationship with our lenders, and why they come to us from lenders is because lenders can't always serve their needs. I mean, you have a client that has a hotel with a lender that they financed it with, and then a couple of years down the road, the lender doesn't want the hotel anymore. And they tell you, hey, we need you to refinance somewhere else or get this loan out of our books. That's where clients, they want someone that's lender agnostic is the term you always use, Matt, of like, we don't care about
Yeah.
what lender the clients go with. We don't care about where they have their banking relationship. We just want to make sure that the lender is willing to lend on them right now. And that's what we will pivot them to. And that's where like clients have come to me and been like, hey, my lender's pushing me out. I don't know what to do. Well, that's where we can come in. And now you're not going to need to worry about the next time you're going to have to change lenders again because you have the constant relationship with me and with AAI that's going to be that constant throughout your relationship and throughout your
Yeah.
borrowing process.
Building that relationship, a good broker is your banker. In a good brokerage model, a broker is really proficient in lending, banking knowledge, and also builds a relationship where they are, in a sense, a bank without a bank. They're a banker, but they do not work for a bank. But we work for hundreds of banks, hundreds of lenders,
Mm-hmm.
but instead of working just for one. So having that optionality out there for clients is another value add that clients might not see and go, well, I just go back to my lender. Do you know is your lender keep being honest? Are you keeping your lender honest and giving the best rate and terms that lender can give? I have told clients many times, like, go to your lender, see what they can get. Let me see what I can get. And if we get better, if you got the best deal that you can get, if you utilize our stuff to beat down your incumbent lender, we deserve some fee for our service. And then next time they're going to probably use us because you understand that they were just giving you a deal that they know they could get away with and not being forthright and giving you the best deal that they could give. That's the difference between commercial brokerage and I think in mortgage brokerage. In the mortgage world is kind of static for interest rates. It is the interest rate environment out there. It is what it is. In commercial lending, things are priced off of indexes, but the pricing off those indexes are different. And what they're willing to do for one client, you have two clients come in with similar requests, you can get two different clients, the same almost deal, two different pricing. And it depends, multiple factors go into play there, and understanding that and getting more knowledge on that is where we come into play and saying, hey, that lender, they've changed because they're a little tighter on they've changed their criteria where you don't know that as a person who does one or two deals a year. When we're doing deals every day long, we understand where their criteria changes, their pricing changes. As you were mentioning earlier, Ben, maybe they were in the hotels a few years ago. They're not in the hotels because they've lost money in part of their portfolio in a different state or a different region. They're taking a hit and they need to close down, they need to get these things off their books because the regulators are pressuring to do that. So this is where a broker can come in and say, I got another lender that we got multiple lenders there in the hotels or gas stations or multifamily. Even we're starting to see multifamily being cut off by some lenders
Mm-hmm.
because their concentration of that asset class is higher than what they're needing for their policies, for regulators, whatever it may be. Something that's outside of the client's control. The client, great deal, but it just doesn't fit their box today. Their boxes change from day to day to day. Not consistently daily, but understand the drift that they're changing, and we need to be on top of that, understanding where that changes go. That's where the broker can step in.
There's no standardize in the commercial world like there is with the consumer market or the mortgage world for primary mortgages. There's no standard, oh, this is how you do it. This is how the debt to income always works. And this is how it always goes. With the commercial world, it's a per deal, it's a industry type, it's an asset class, it's the lenders, how they're going to look at it versus a different lender. You even have times where a lender that you might have a relationship with that might do the loan, if you present it to them, they may not do it. But if we presented them, they're going to do it. Like that's how frustrating it can be in the commercial space sometimes is it really takes you got to have your approach and your ask right from the start. Otherwise, you're not going to get a lender to buy in. And that's where clients will shoot themselves in the foot from times when they just go out and, hey, I have a bank account with Banner. I'll just go to Banner Bank and they'll help me out. And whatever happens there, and it doesn't work out because Banner didn't think the deal was actually good because they didn't get all the information right.
One thing I've noticed through the last 8.5 years doing this, I can go to the same bank, two different lenders, and get two different responses.
Mm-hmm.
So how frustrating is that for a client walking off the street, walking into their bank that they have a relationship with, but they speak to this guy over here that says no. But if you would have walked a desk over and got to the other loan officer, they would have said yes. And sometimes it's loan officers are they're sometimes too busy. The client might be too complex and they don't want to have to deal with the information that has to be gathered, or they're not as hungry. I mean, and
Maybe they don't
it's
have the
in that
pull.
market that's a little different. Yeah, they don't have the and in the credit where one thing that we have been working on with a lot of our lender relationships is where we can actually talk to credit. I mean, there's
Mm-hmm.
times where actually I sent off an email this morning where I had a little technical difficulties. It was supposed to do a couple of days ago, but it was on their end, not my end, not our end, guys. But where the underwriter actually sent me the spreads and showed me how they were looking at the deal and had me review their work. And I went through and I found a few different things where their assumptions were incorrect. They missed a few different things. This is a very complex client with 14 different entities, but we know that we've done multiple deals with this client, so I'm very in depth knowledge of the client. Going, what'd you do here? What'd you do here? And I go, well, you missed this. You annualize these numbers for all these properties, but you didn't, and you annualize the debt. But these two properties you annualize the debt, but you didn't annualize the income out. So now you give them 8 months worth of income versus 12 months worth of debt payments. That doesn't logically make sense. Or here was new debt that was taken on in 2025. You gave them all the debt payments for 2025, but you gave no income because that was a new property in 2025. Well, why didn't you ask me for 2025's financials on that and then annualize that out and give that income? And to the point where it drastically changed the cash flow and the debt service coverage ratio of this client. So that in-depth working with underwriting is where a broker can do that, where a client is not going to be able to take the information and go, well, they told me this doesn't work. Without the time and the expertise, that's where a good broker comes in and gives that time, the expertise, the ability to be able to work through those and navigate and go, now they missed this and this.
Mm-hmm.
Well, unless you're into this on a day-to-day basis and you're constantly doing this and you know what underwriting is looking for, it's hard for even seasoned investors to be able to know all that details of how it works behind the scenes with underwriting and banks. This comes back to, I think, brokers, the misconception out there that brokers don't add value. If a good broker is doing those things of really delving in and understanding your financial position, having those conversations with underwriting if need be, getting those things, that's where the value add comes in. Minus the time that we're talking about earlier and things like that. The value add on a deal can be when we're matching with the right lender for you, not just the lender to get the deal done, the right lender that is going to take his deal and do what's needed to be done based on your certain circumstances that you're around, and also understand the underwriting and how to work with that lender on their underwriting, because every lender has different underwriting quality standards and what they look at. So we're able to navigate that scene. That's where a good broker can come in and do that value. And that's where AI tries to we do that for our clients. We're advocating, we're understanding the package, we're understanding the deal. As we were mentioned to earlier, it's almost like it's our deal. It is our deal. We understand it well enough that I don't have to go back to the client and ask a lot of questions. Sometimes we'll go back to a client and go, hey, this is what I gleaned from this. I am asking for confirmation. And that way they know that I am on top of their stuff. I just want to make sure that I'm 99% right. I want you to make sure I'm 100% right. before I answer this question. And sometimes I have to go back to them. Sometimes like, there's no confirmation needed. This is here, this is here, this is what's happening in financials. And so that's
Well,
something I think the value add comes back to.
100%. And that's kind of one of those things that differentiates a good broker versus a not good broker is one that takes the time to do a lot of the underwriting and that like information collection up front. I mean, there's times where someone will send me a deal and then I'll ask them for more information. Like, well, you should have enough to shop it with what I gave you. And it's like, cool, I could, but am I going to be able to shop it as good as I would be able to if I had all the information that I'm requesting? No. That's why we're requesting it. We're getting the information so that we can make our job easier as well as the lender's job easier, faster for the client. Because, like you say, it's not always about the deal getting done or the best rate, it's about the time is so big. You could have a deal that takes 6 more months to close, and now you've eaten into a bunch of more of your profit margins because you've just been sitting waiting for the deal to close. You've missed out on potential revenues, all of those type of things. It's the whole picture coming together. The nice rate, the good timing, and the lender that's in for the deal, and that's what you have to blend together. And that's what a good broker should be doing for
I think, and what you mentioned there is prepping the borrowers. If we're able to get on the front end of things and get things prepared and ask for and get all the information up front before, let's say, before they go under contract to purchase some. We have a lot of clients that have been referred to us lately, and I get a little nervous when I ask the question. I go, "So you guys under contract?" No, no, no. We're looking at some properties, and we want to, and we got referred over to you. That is great because I want to prep you and make sure what you can afford, what works for you, and make sure we understand everything, and then let you run. And then when you start to look at a property, run it by us so we can give that advice back and go, Okay, here's a price I would go at, and here's why. Here's what we're seeing that the real estate broker did not put onto their, their pro forma, their, calculations that were going to be caught by an appraiser that's going to be caught in an appraisal. Oh
you.
yeah,
Mm-hmm.
100% occupied. There's no property that appraiser gives 100%. You're always going to put a vacancy factor in, even on a triple net single tenant lease. You're going to put some credit loss slash potential vacancy because there's no guarantees. So you got to put some of those risks in there. Well, there's no building maintenance repairs in a triple net lease. There's still CapEx that you should be reserving for because you're going to have to fix that roof at one day. You might be
Oh,
in
I
charge of the
manage
parking
the
lot.
property myself. I don't need to pay for a property manager. Well, no, and most people are going to pay for a property manager. So when we look at appraising and
Well,
valuing the property, that's going to be a cost that's added in there. So,
yeah, and you got to take that. Yes, you might manage it yourself, and you're going to save money, but from an underwriting and from the way the lenders have to look at, they're looking at it going, well, if this, they're always looking worst case scenario. If they default, we're going to have to get a property manager to manage this property. We need to have that expense put in there. We're going to have CapEx back. We're going to have these expenses that maybe as a good property owner, you don't have those expenses, but that's just gravy on the top for you. But in the marketplace, how it's looked at from appraisers and underwriting, we have to include those. So once we start putting these numbers in, I might tell a client, this doesn't make sense, but it only makes sense at this price. If you can get it this price, it makes sense. Or what other value upside do you see there? So it comes back to the advisory role that a good broker does, not just with the lenders, but it's the upfront advisory that a good broker should be doing is saying, hey, I don't know about that deal, or oh, that's a great deal. Yeah, let's run with it. You're giving the advice to proceed. Most people just don't nilly willy go buy some stupid stocks out there because something they read, right? Usually, if you're like, hey, I want to speak to my advisor about buying this, what do you think about this stock? You do it before you go and make the purchase. We're in that same capacity, that advice back, because our goals are aligned with your goals. And that's the number one of a good broker. And that's where AI stands out is we're aligned with their goals.
100%.
You look at his end of this call, you look at this call, Ben and I'm a little bit older than Ben. I'm looking, a little good minus the gray. We're in this for a while. So I look at it goes back to one of our core values of our company. We're here for the long game. I'm not here for one-off deals. We handle one-off deals because some clients just need one-off deals, but I'm here to build a 20, 30, 40-year relationship with my clients and be here that when we're in our 70s, 80s, that we're sitting back in a rocking chair talking about the relationships we built because of all the good work we did over the years. That's where we want to stand out. We built strong relationships through the pride that we put in our work, not because we made a boatload of money and we moved on about the next life. No, at the end of the day, I can't take money with me. I can only take all the relationships and memories I built and friendships over the years because of what we did in our job. Our job is so many hours a week. We put a lot of time into it. So we want to do it right for our clients for the long game.
Agreed. And just going on to what I think kind of separates us a little bit from some brokers is that we charge our fee when we close a loan. So we do so much upfront work that's at no risk to our client if the deal doesn't work out. And that's showing that we're not here just to make a quick buck. We're here to advise you and tell you, hey, don't do that deal and not make money on it by giving you that advice so that then on the next deal that is a good deal, you can trust our advice even more. Because when it was a bad deal, we told you it was a bad deal. We didn't just take a quick loan or make the quick buck. We care about you coming back again and again and again. We don't want to put our clients in a situation where we got them a loan. Sure, we got them one of those break your kneecaps if you don't pay it back loans, but that's not what we're here for. We're here to make sure that they're going to be successful in it and that they come back again and again. And we do that by saying, hey, we're not charging you upfront money. If we get you the loan and you close on it, that's when we get paid. Our goals are aligned with you. We got to get it to closing.
Yeah, and how many clients just pick up, text me or something? Hey, tell me about this property. Tell me what you think about this property. Oh, just their advice back. I had one the other day. Just, hey, take a look at this property. This is what I'm thinking. Here's the rents we're getting. I go, tell me what we can get for financing. Let me see if this works. Okay, here's my thoughts. I think it's good for this reason. Don't forget this and this and this. Here's the true NOI that we'd be calculating off of our assumptions. Yeah, please proceed. And sometimes it's don't proceed, and they go, oh, thank you. And they move on to the next deal. It's that's time of ours. That's a free advisory service up front because we really care about the long game again. And that's
Mm-hmm.
we're a broke. That's what a broker should be doing out there in the marketplace. A broker should be taking care of you, and then throughout the loan process, one thing a broker should be doing, a good broker, a solid broker model, is next to you the whole way through to closing and even post closing to assist you out. And
Mm-hmm.
when I say through the closing process, the banks have all this fun paperwork depending on what bank you go, type of loan, making sure that we somebody knows how to complete that on your behalf or with you in conjunction, whatever it may be, to get this deal and make it done faster. So they're actually a team member of yours, not just a service. We're a service, but we're on your team. We're part of your
Yeah.
team. We're your outsourced CFO, and we are there to assist you in this. And we have team members behind the scenes here. And the good brokerage shops have those. That's what differentiates good brokers versus bad brokers is, do you have a team around you that will facilitate this transaction on behalf of the client? We will go through all the way. You don't need to speak to the lender. You don't need to complete their paperwork. That's what we're for. We want to be full service, white glove service, as I mentioned sometimes, Ben, is we're here from beginning to end, construction deal, helping you after the construction because is that yes, the financing done, but the project's not done. And I want to see that project to fruition. I want to be able to walk that
Mm-hmm.
project, which I'm going to be walking a project later today that we're in the middle that we just got financing for. And you can see the construction going up. We're going to do some progress reports on that every so often. I'm there through the whole road trip for these guys. I'm here to the end. I want to see
Yeah.
it get leased up and you make money, and then you can turn it to your next project. Those are the things that a good broker and a good broker model. And always say models because you should have a team back there supporting the clients, and it's not just a one man shop. It's somebody who can actually, hey, this guy handles it. We help you all the way through. We
Well,
try.
that's what I think really separates us from a lot of the brokers that even the brokers that then bring us deals is a lot of times they're just a one person shop and they're trying to do it all. They're trying to find the lenders, they're trying to underwrite the deals. And if you're trying to do too many things, we all know that like we all have our skills. And I'm not one to spend a lot of time underwriting a deal. That's what Jay's great for. But Jay's not one to spend a lot of times out networking with clients and building those relationships on that side. He likes to be behind his computer working on the data and digging into the numbers. We work well together as a team. That's what makes AI different is we have a team of people that all fill different roles and we work together to accomplish the same goal for our client.
I think a lot of that comes back to the core values we have as our company and also our experience being in banking for years. Myself, Jay, a team has been in banking and understand the pitfalls of banking, understand how to navigate that. And we want to do it in a better, different way than what's actually happening in the marketplace. Because sometimes when we're working on deals, I go, I don't know how a client would have done this walking off the street. There's no way they would have got through this process.
Mm-hmm.
And when they thank you when the job's done, I mean, they're grateful and you see the things that happen. That's when you know you've done a good job. And the last thing I want to say on that is Jay and I have both been CFOs before of financial institutions, and having the CFO mindset, we relate back to our clients of being their CFO in a sense to assist them. That is also that financial knowledge that we can provide, not just getting a loan, it's the financial knowledge that comes with this, using that. I think on our next episode, you'll hear from a couple of our trusted lenders that we use a lot in how we speak about and how they view us when we bring them transactions and how they view us, what role we really play for our clients, not just being a broker off the street, just saying, hey, here's the deal. Good luck, guys, let me know when it closes so I can get my money. No, it's not the name of the game here,
No,
And that's where a good broker will set it apart is what value are they adding to you? What value, time, money savings, long-term profitability, the multiple factors that we can bring to the table.
agreed. I think some closing wrap up remarks, some kind of boil down what we talked about. A broker's real value is strategy, packaging, and the lender fit. It's not just finding a rate. If you think we're just rate shoppers, you can find the brokers that's what they'll do. You can rate shop yourself. But what you're really going to need 9 times out of 10 is the other pieces figured in there. You can find a good rate. And that goes one last caveat to that. A lot of times when you're going to a lender, they'll try to just overpromise and they don't always deliver on that. So they may promise you the lowest possible rate, knowing that they just want to get you in the door. They want to get your bank accounts. They want to get you into their bank, but they can't really do the loan. And when it comes down to the closing table, the rate's higher than they told you, or the loan amount's lower than they told you. And that's where, if you had a broker on your side, that's not going to stand. We're going to hold them accountable to what they said. We're going to hold them accountable to their promises and to help navigate any of the issues that come up so that we can get you the best deal. But that doesn't always come down to just the lowest rate. The
There's
story
more to
behind the
the deal than
file
money.
matters as much as the numbers do. That's the other big thing too. That you can have numbers all together, but you got to have the story. That's why we have resumes as part of our like request list from clients. And everyone's like, "Why do you have a resume? I'm not applying for a job. I just need to know your background. Who are you?" That's we have to share that with the lender because they care about that story just like we do.
I want to understand if you have the capacity, the character to be able to pull this off, handle that transaction, and it shows in your experience, in your work experience, and your investment experience. So brokers are all different out there, different ways. There's a good brokers, there's a okay brokers, and then bottom of the rung brokers. And we're not gonna pick any names, throw them out there, throwing them at us, but we're just want to show how AI is. We are a broker, but we're more of an advisory firm and how we want and how we do it different here than the other brokerage shops because we are a member of your team and helping you accomplish your financial goals. So that's what we're here for.
Yeah, we're here to be an advocate and prevent as many of the problems that could happen in your deal before the lender even sees it. I mean, that's a large portion of why we underwrite so heavily up front and we spend that time up front because it's way easier to solve a problem before it happens than it is after it's already become a problem, before it's become a
Yeah.
red flag or something.
So we look
This
forward to
was
seeing you guys. We look forward to seeing you guys on our next podcast.
Yeah, so our
Be
next
coming up.
podcast is going to be a little
We'll
bit more
delve
about
in.
why AI, like Matt was saying. We're going to hear from some other lenders about why they like working with us and why we're not just your normal brokers. Thanks for coming to this podcast, listening, subscribe, like, follow, all that good shit. And we'll see you guys next week.